Hello investors, how are you coping with the increase in fuel prices, especially the diesel users? Me being one of them. What? I think EPRA has an issue or has beef with us. I don't know. 46 bob. That is too much. Anyway, back to my video. And this video is for dividend investors. This is just a list of the companies that have declared dividend going forward and their book closures have not happened. These are key dates that you need to watch as a dividend investor going forward. One of them is Stanbic. They declared a dividend of 18.55. Apparently or unfortunately, the book closure was today, 15th May. And the expected payment date for this dividend is next month, June. The others like Nairobi Security Exchange with one book closure is 21st May. You can go through this list and you see which company that you can invest in going forward and benefit from the dividends before the book closure. But there's something I would like to bring to your attention. You know, a dividend of 18.55, it looks so attractive, is it? Yes. A dividend of 16 bob looks so attractive in the eyes of an investor. But apart from the dividend, there are some analysis that you are supposed to do before you invest in any particular company for dividends. And that's what we call, and I've been mentioning it many times, what we call the dividend yield. And how do you calculate the dividend yield? You take the dividend divided by the current when you are buying share. If I want to buy Stanbic today was trading at 295. If I wanted to buy Stanbic today so that I can benefit that dividend of 18.55, so I would have invested 295 to get a dividend of 18.55. But calculate the dividend yield. How much interest or what is the return on this cost of 295? If you do that, it is coming to 6.29%. And for this one, mark you, I took the final dividend yield. This one does not include the interim dividend because some of this company, you can see I've written here final dividend. They had declared an interim dividend initially. But some of others, it is first and final. There was no interim dividend. So do your analysis and check whether the company that you are analyzing, are you comfortable with that dividend yield? And if you are comfortable, you can go ahead and buy it. An example is like this Stanbic. Today it was trading at 295. Assume I bought for dividend. So my dividend yield would be 6.29%. But since the book closure is today, if next week this share go down, most of the times when the book closure happens, the share price go down. If this company next week it trade at 250, and I say I'm not interested in that dividend of next month, let me think about future dividends come October this year and June next year, and maybe you buy that share at 250. I'm just saying, I'm not telling you that it's going to go to 250, but I'm just giving a figure. If it goes to 250, angalia, your dividend you'd have changed to 7.42%. And mark you, this is the final dividend yield. If you are to take the final and the interim and final dividend, of course that figure will change and it will be a better figure than the 6.29. So you buy your share next week at 250. So you come here, the interim dividend for Stanbic was 3.80. The final dividend is 18.55, which is this that is giving a dividend yield of 6.29. Then you come here and say, this is the dividend. Come here and say the annual dividend is 22, and you bought the share at 250. That is next week Monday. Yeah, you see what dividend that you are getting? A dividend yield of 8.94%, almost 9%. Assume that share price even goes to, you keep on averaging down it goes maybe even to 200. As you average down, and the average by the time they are paying dividend is 200. You see, then the dividend yield keep on changing. And this one, there is that assumption that the dividend that was paid this year, it is the same dividend that will be paid next year. And this figure can change because most companies they keep on increasing the dividend. So as you keep on averaging down your price, assume even it comes to 190, as you average, as it goes down, your dividend yield keeps on improving. So make a decision. Uangalie all these dividend yields. Are you comfortable? This is equity. That is equity groups. Equity group. Are you comfortable with that? Dividend yield of 7.6%. Let me take it round like this so that we can see the companies well. Yes, if you check at equity, and this, the first and final, are you comfortable investing at equity with a dividend yield of 7.6%? I want to bring the one for Kakuzi, which was 16 bob. See, the dividend yield 3.81%. Fairly low. Because their share price is 420. But their dividend was 16 bob. So the 16 bob was looking so attractive in the book. But if you look at the dividend yield, 3.81, which is so little. If you go down here, there is this one which is 2.30% for TPS East Africa. Is it worth it? So as a dividend investor, apart from the dividends that you are being paid, go a step further and analyze the return that you are going to get in terms of dividend. Thank you.